Okay, Adam, I just promoted you. I'm going to unmute you. And it was really great to have you back. The screen shares the green box. There you go.
Hello, do we have the audio here too?
Yeah. You're a little low. Can you turn it up a little bit, buddy?
Yeah, let me see what I can do. How's that? Is that a
It's
little
a
bit
little
better?
better. Yeah, it's a little better. Good.
Yeah, thanks, Adam. So happy holiday season to you, buddy.
Well, and to you guys as well. I'm feeling the love here. It's lovey-dovey Monday.
Yeah, anyway, you have to bring your violin and handkerchief when you come to be interviewed by me, buddy. So, what I found interesting, Adam, is that, you're always willing to come on and talk about, what you're seeing in the markets. But this is the first time you said to me, I really want to talk about what's happening to the debt markets in the oil patch that could be a big factor in 2020. First time you've ever come to me with a topic that you felt like you really wanted to get the message out.
Yeah, I mean, it's something. A lot of things are really starting to come together and happening in oil, and I mean, we can all see the chart, and I can pull it up.
Yeah.
That I think it's just been overshadowed in the last couple of weeks with the Brexit vote, with a lot of the economic moves that are having the trade war.
Right.
And if you look at oil, I guess in general, if you look at the last year and you just exclude the first few days of the year because it was so volatile around year end last year, this range here between 50 and 65, call it, that's the narrowest range in oil in 16 years.
Wow. So it's kind of lined up with, compressed ranges we have in FX too. The only thing that's expanding ranges are maybe the metals and stock indices. Yeah.
And what's the old thing you do in a narrow range? I mean, you really have to watch it for the breakout and the big move, right?
Right.
So that's kind of where I'm at. That's where I start from in oil. And then to build it out from there, I mean, what's the biggest story in oil in the last 5 years? It's shale, right?
Yes.
And if you look at debt issuance and what's available in the last year, really, the market is just closed. It's completely closed to shale now. There were a lot of, I think, promises, and just the market has changed into a deleveraging theme on everything and a free cash flow. And it used to be about you could take on more debt if you were drilling for oil, and you could issue more stock as long as you were growing production. And that's really the story of shale for the last 5 or 8 or 10 years.
The growth of production.
Right. And that was fine. If you were a company, you could do that. And now the switch has flipped into the market to say, you got to make money. Let's see it now. Let's see the dividends. Let's see buybacks. Let's see free cash flow. And they're just not able to flip the switch. And the debt market's saying, listen, we're not lending you any more money. And if you look at shale, it really kicked off in 2010. And 2010 to 2014 was really the cheap money era for oil.
The Bakken just got developed.
Right. It was just all starting. They were throwing money at it. I mean, this is the start of the ZERP era, right? And oil was one of the first things they threw it at before tech really boomed. And that paper now is coming due, right? So it's 2010 to 2014. It's a lot of 10-year paper there, and it's coming due 2020 to 2024. And so number one is there's going to be a lot of pain in the debt market because they're not going to be able to refinance at anything close to what they were paying now, if at all. So you have bankruptcies, and you're seeing it with like the Chesapeakes and some others down the line.
Yeah, Chesapeake. Are they on the verge of bankruptcy? They had a decent recovery last year, but I guess the debt has finally come home. This is maybe a poster child for what you're looking at.
Exactly. I mean, they're the kind of the first off the mark. I'll throw it over to a Chesapeake chart here before we. But so but there's so many more down the line, and there wasn't any differentiation in U.S. oil, right? So you had Bakken field, you had this Marcellus field, which is a lot of gas. And you had the Permian Basin, which is the main field. And that's the strongest field. But these other ones they're finding, and just last week, Chevron took a huge write-down in the Marcellus basically wrote it all off. And that there's really only one good field. The back end is busted here now.
You mean it's tapped out?
There's just no money coming in. It's uneconomical.
Okay.
And I think what happened, if you go back even to the bust in 2015, 16 in oil, is a lot of people went bankrupt then. And a lot of equipment came back on very, very cheap.
Right.
And that kept the party going a little bit longer.
So it's kind of like an echo. We had like a kind of an echo to the initial boom after the first bust. And now we're facing almost the same situation. Now, what I've been told, I want to ask you, you're talking about they can't make money. Is it because of the quality? Like I interviewed a guy who's an oil expert professor from University of Oklahoma, and he's saying that really the problem is with fracking, it's a quality of light. No one wants it.
It's too light. It's too light.
Okay,
right
so
now.
is that one of the reasons why? Who's going to finance a product that is out of favor?
That's Chesapeake there, just to close up for them.
Oh, okay,
You're
yeah.
down to 78 cents.
Oh,
you
my
can see
God,
there's
yeah.
nothing left in terms of support here.
Yeah, boy, McClendon must be, rolling over.
I mean, he knew.
You know what I mean, buddy?
You knew
That was his life's work.
That was
Anyways, all right.
So yeah, that's part of the story. But you can blend that out, and I think there's a little bit more demand for Canadian oil because of that. But you can't get it there because there's no pipelines that go north south. But
Okay.
it is really, any business is profitable if you're borrowing money at 0%. I mean, all you have to make is a little bit of money and you're profitable. But if you're paying 9, 10, 12%, now your whole economics change in the industry. And I think we're at that point right now. And plus, if you want to go and refinance, do you really want to lend money to oil for 10 or 20 years, not knowing what the state of play is going to be in energy 10 years out? Right?
So is this going to be like short-term negative on price as we go through a liquidation stage, and long-term bullish because you're going to be taking off supply that may never come back?
Well, that's the big thing. And I think it's a little more short-term bullish than that. So that's how it all plays out, right? Everybody is going to run. I mean, you start getting some bankruptcies and big write-downs. Like that's Chevron taking a write-down. I mean, it's a super major, right?
Yeah,
So,
I didn't know they were.
Yeah, and then you have the smaller ones are just getting hammered. I mean, the prices are down so far, and it's not really getting the attention. But built into a lot of the oil price forecasts over the next 2 years, 3 years, is more and more shale coming online. So we're at, I think, 12 million barrels per day in the U.S., 12.8. And that's supposed to grow to 16. I mean, that's sort of the long-term outlook. But now we're starting to think we might see the peak in the next 6 months, because all these companies that were growing production are saying, listen, the market doesn't want production anymore. They want to see cash. So they're cutting costs, they're cutting drilling, and they're running out what they have. And it's just a matter, the big question, the open question is, how productive are the wells they have left? So if you listen to some of these oil executives, they're saying, no. We were drilling the second tier stuff before, and we still have a lot of this tier 1 acreage, and we'll drill that when prices are higher. But to me, that just doesn't have any believability. They've been drilling the best stuff. The best stuff's gone, and they're going to get into poorer acreage here, and the economics start to get even worse. And so drilling really drops off even this year, and the market is going to start to tighten up.
Okay.
And if you look at sort of the long-term outlook, to bring on things that are not shale, offshore or major
it takes
greenfield,
forever.
It takes 4 years.
Okay.
So you're starting to get this mismatch now. If U.S. production tops out here, and you don't have anything coming on for 4 years, if it ever comes on, and you have a lot of decline in shale quickly, then I think next year could at some point have the real pop in oil. And I just think it's just not out. And in terms of the inflation story starting to feed back in, right? In terms of, gas prices go back up. Sure, that's the kind of unique factor, but it starts to get people feeling a little bit of inflation. You get inflation expectations. Maybe you get some wage growth on that. and it starts to flip the whole central banking script. So to me, that's the big unknown right now is oil, and nobody is talking about it. You know, and you
Yeah,
see
it's hard to find even with the stability in the oil market here. To me, like, I'm trying to top pick it in here. To me, it seems like, 61 and a half is going to get all the technical analysts constructive on the market. Don't you think, buddy?
Well, yeah,
That's
and
kind of,
it kind of even just sort of in the last week or so, we saw
yeah,
some levels start to give out. I mean, you had that
yeah,
Saudi spike, right? So what do you
yeah,
even do with that line on your chart? I mean, it was 2 days, it was up over there. So I don't know, maybe forget about that and you watch this 60, 61 kind of zone and see if we can pop above that. But there's a nice
right.
little trend coming here.
That's a beautiful
And
triangle. And it's a pretty, it has pretty good magnitude too. You're talking 77, talking about $30 range, $35 range. So that could take us to 80, 90 on a breakout. Is that what you have in the back
yeah,
of your head?
I think. I mean, what happened? I guess you start to get back into OPEC, right? Because they do
Yeah.
have a couple million barrels of oil that can be tapped. And what happens if you get oil back up to 80? Well, all these companies I'm talking about in shale that didn't look so good, well, they start to look a lot better again. So you kind
Someone's
of,
commenting that it's not true that major oil companies have highlighted the parent-client relationships for a while now. I'm not even sure. Do you know what that
yeah.
question
So
means?
is parent-child?
Oh,
You have two wells, and the way they drill now is you get the decline rates in how you drill is what that's related to.
okay.
Just to simplify it. And yeah, it is out there. I think what they're saying is a lot of people in the oil market are starting to highlight this. But
Okay.
outside of it, to a more generalist audience, I don't think there's any sense of what the risks are and the opportunities are. And where the money's going to flow kind of back into traditional oil. I think there's a really interesting and great trade shaping up there. And
Okay.
I wonder what happens in the debt market if it reverberates through and what happens with OPEC. But
How about what happens to the dollar? Are you in the camp that the dollar has put in an intermediate term high up there, Adam, a few months ago?
well, yeah.
Because that would play into at least the nominal value of crude. A weaker dollar could be supportive of everything tangible, right?
Well, and then the money starts to flow out of the U.S., right? It's one more thing. Investment dollars sort of go back into more traditional oil, which can be U.S. I mean, there's Gulf oil there as well, but towards maybe some emerging market fields and with if you have the global growth story, it's pushing up crude anyway, pushing up commodities.
Right.
We had this stability in the Fed, which is the much bigger factor. And I
Yeah.
think the money's going to go out into emerging markets.
Okay. I am so glad I have you here today because I've asked a few people about this. What do you think is behind the problems in the overnight repo market, Fed funds market, Adam? We know it wasn't a big tax payment needed by one of the banks. So they're afraid to lend to each other. You have any idea what's going on there? Is that a canary in the coal mine about structure of the markets right now?
It was if they iterated was the Credit Suisse note last week, really, or 2 weeks ago, I guess it is now. Raised a lot of the real concerns. So it started out, it kind of came out of nowhere for a lot of people. I mean, I'm not deep in the market plumbing. It happened. It made sense on the corporate payment issue at first, right? And then it persisted.
Right.
So that can't be the problem.
Right.
And if you read some of the notes, the way the lending works is a lot of it is really through JP Morgan. They are at the kind of top of the food chain here as this lender. And they started to pull back in part because capital rules, but there's also some thinking there is that they wanted this to happen because they don't like the rules about liquidity. And so the question, right? I mean, there was a repo today just before I came on, and it was 120 billion offered, and only 36 billion was taken up. That's just an overnight repo, so there isn't a lot of tension there. But if you look at pricing over year end, it's up around 4%. We're still early, so that's going to go up higher. And the thing is, so you're a bank, you have all this collateral at the Fed, and you can lend that out, but only it's working right now with bills and short-term paper. And that might be maxed out. And what people really need to lend is treasuries. And so
that's the safest paper. Everyone wants them.
The way it works, though, is you can't use that as collateral.
I see.
And so that.
So Jamie Dimon is coordinating this so he could have the rules change and maybe use T-bills for collateral.
Paper, bonds for collateral. But the thinking was there just wasn't enough liquidity out there. So the Fed's pumping in all this liquidity with bills and borrowing that and trying to get more and more of that. But they want to lend bonds. And the problem is if the crunch comes down, they might have to sell bonds. And that's kind of where you're going to see it. And that, I think if you want to watch something, it should be probably around the 10-year space, because if there is a liquidity problem, you end up having to sell bonds, and then that kind of roils the market, right? If you start to push this up over 2%. So that's 10-year note yield. It's really down here at the bottom of the range. But if you were to see this sort of spike up, then you might get a Fed response, and then maybe even changing the rules, and then you're pumping more liquidity back in, and it's just party time for stocks, for risk assets, for emerging markets.
Wow.
And that global growth.
It's a great explanation. So anything else you want to talk about? I'm going to have to watch this again just to absorb it all. But basically, this oil thing could be kind of a catalyst for everything else around it, instead of it just being kind of an outside influence on the markets.
Yeah, I think it's overlooked right now. I think you have to watch it and how that's going to sorry, I screwed up my chart. How that's going to feed kind of back into the debt market, because there's a lot of places in the debt market that's been very easy money. And,
corporate debt. You see that a lot of people talking about. That's really the next bubble. A lot of corporate is really been downgraded to just a hair above junk.
It is, and this is kind of this cliff that's very interesting, right? So you have so much as just a hair above junk, and if you were to have an economic slowdown, then it all becomes junk, and then there are no buyers for junk at that, the amount that's out there. So
so really, isn't that junk what companies use that debt to finance stock buybacks and pay out dividends? They certainly didn't use it for, expanding plants and equipment.
Yeah, that's exactly it.
So they're long their own shares on margin, and the cost of their margin loan could go up, forcing them to maybe. Can corporations ever liquidate? You always hear about buybacks. Can they also put those shares back on the market if they have to?
No, I mean, you just kill your share price if you start to do that. So it is. I think what is happening in oil is
they own their own stock with debt. It's
but
the
shares are canceled, so they have to reissue them.
Oh, okay.
All right. And I think what's happening in oil is probably, I think it's an oil story for next year.
Okay.
But watch it, because that's what's going to happen everywhere in the next downturn, whenever it is. And because it's just this, the market's going to go from lending to not lending at all. And unless you're a company that's cranking out cash, you're just not going to be able to borrow anymore. And so you have these kind of markets that are just feast or famine. And one day that you just fall out of favor, in the same way that things become the flavor of the month right now, where it's marijuana or something, and they just throw money at it, which is also happening right now. And then one day they look at the numbers and say, listen, this isn't making as much as I thought. I'm not going to lend you anything anymore. So your business just falls apart overnight, and the share prices fall apart. And I think that's kind of the nature of the next recession, is that the debt markets were so cheap, and then it's just closed, even with the Fed at zero.
Interesting.
So, but for next year, I'm optimistic. I mean, this Aussie yen chart to me Aussie dollar has been a very compelling one. I'm sure you've been looking at this.
Yeah. Yeah.
Broke this downtrend, 200-day moving average.
Yeah.
Looked like we were breaking through the 200-day moving average on Friday, and the deal wasn't so great. It kind of just flirting with it here again, but
And gold looking good too.
Gold. I mean, I just heard Steve talking about it. I couldn't agree more. I mean, and there's a seasonal tailwind for gold that really starts about now and goes through February. So
all right, why don't we wrap it with trade? Because according to my eye, if I pull up the weekly chart of gold, U.S. dollar yuan, and TLT weeklies, they all look bullish to me, and like they all could break out and make new highs. Does that mean anything to you? If for example, we had a trade deal look like kind of a stop hunt on the daily or intraday on the yuan, and then it came back Friday like a champion and looks like, I know it's managed quite a bit, but it looks constructive, just like gold and the bonds do.
But that's just a little bit worrying, right? Seeing the bonds look strong.
Hello.
Yeah, I think. But
what happened?
Oh, it still got me. Dale, or did we just lose you?
Hello,
Dale. I'm surprised.
You hear both of me? I can't hear Adam.
I can hear you. No.
I wonder if it's something I did. Adam,
I can hear both of you guys.
I don't know if you could hear me.
Good. Okay. Coach, can you hear me?
Okay, everyone could hear us. So I don't know why I can't hear you.
This is Blake.
Hi, Blake.
Can you hear me, Adam?
I can hear you.
Well, let me type to him really quick.
Okay. So anyway, since I can't hear you, Adam, I want to wish you and your family a great holiday season. I can't hear Adam, so it's got to be me. Anyway, I want to wish you a Merry Christmas, a Happy New Year, and I'm so glad that our paths crossed and that you come on and edify faith like this. And I read a comment that some of our attendees read your stuff every day. Thank you for what you do for the trading community as a whole and taking time out to hang out with us here in F.A.C.E whenever I reach out to you, buddy.
Thanks, Dale. I don't know if anyone can hear me.
Brother.
Thanks very much. Yeah, Happy New Year to everyone.
And with that being said, since I can't hear anything, everyone
Thanks,
have
Adam.
a great day.
Cheers.
Good hunting.
Cheers.
And we'll see you tomorrow, and maybe I'll be able to hear everyone tomorrow. Makes you appreciate hearing. Thank you, Adam. So that's a wrap, everyone. I'll see you guys tomorrow. Thank you, Brock. We have David Jansen tomorrow, the real one. So that'll balance out Adam's optimism. I'll see you guys tomorrow. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow.